Ever wondered what the real difference is between a debit card and a credit card? Whether it's swiping, tapping, or clicking, both can provide their own benefits as well as downsides if not used correctly. They're both like using cash, but are great ways to pay faster and with fewer crumpled bills in your pocket. Now, which one should you use? Let's break it down. You can think of debit as your money, whereas credit is borrowed money. Swipe a debit card? The money vanishes instantly from your account. Swipe a credit card? You're promising to pay it back later. Debit cards are like using cash straight from your bank account. You buy a coffee and boom, that $5 is instantly gone from your checking account. If you use a credit card, you swipe now and pay later. However, this comes with interest if you don't pay back the credit card amount for that coffee back in time. Pretty much, debit cards pulls your own money from your bank account when you make a purchase. Some pros for using a debit card include: you won't rack up debt because you can't spend what you don't have. No interest charges. They're great for budgeting because debit cards keep you grounded, literally. But it's not all sunshine and savings when it comes to debit cards because they don't help to build your credit. There are minimal fraud protections, and there are overdraft fees if you spend more than what you have. Now, how to use them. Debit cards are like training wheels for your financial life. Simple, direct, and great for staying in control. You can use it for everyday spending or as a backup to one of your savings accounts. Just make sure to avoid overdraft fees by knowing your account limits. You can turn on balance alerts to be aware of how much you have left in your debit account to avoid overdraft fees. Now, let's take a look at credit cards. Credit cards are a great way for building your credit history, but only if you are able to pay them off in full every month. A credit card is basically a short-term loan on a piece of plastic. When you use it, you're not spending your money. You're spending the bank's. It's like borrowing $100 from your brother to buy concert tickets. Except they charge interest and want more back if you don't pay them back in time. With credit cards, each month you get a billing cycle, usually around 30 days. Use your card, get the bill, and pay it off. Fun fact, you've got a grace period, typically 21 to 25 days, to pay it off. Pay in full equals no interest. Miss that? Then, interest attack if you're not careful. Used right, credit cards can be your best friend. They help you build credit history, which is like your financial GPA. Better GPA, better chances of getting approved for a car loan, apartment, house. You get the idea. And let's not forget perks such as cashback, travel points, and fraud protection. The reason for better fraud protection with credit cards is because the bank wants to protect their money. So, sounds like a great deal, right? But misuse it? It's a spiraling trap. Pro tips to master this card. Make sure to pay in full every month to get no interest. Missing payments also wrecks your credit score. Don't max it out. Don't go over your limit of spending what you can't pay back. Also, set reminders or auto-pay. Got the difference down? Credit is borrowed, debit is direct from you. Now you're swiping smarter already with two powerful tools when used right. Smash that like button if your wallet feels smarter already, and subscribe for more tips.